Hello listeners and welcome to the Montel Weekly Podcast, bringing you energy matters in an informal setting. My name is Richard Sverrisson. Listeners, if you are wondering what to make of the latest news coming out of Germany or what's happening with Brexit in terms of what it means for the carbon market, then you've come to the right place. Because today, in a carbon special, I'm joined by Tom Lord of Redshaw Advisors. Welcome to you, Tom.
Thank you, Richard.
And my old pal Alessandro Vitelli, who's been covering these markets since the 1890s, isn't that right?
Greetings. Yes, 1880s.
Perfect. So a warm welcome to you both. Now, I hope 2020 has been good to you so far, Tom?
Yeah, we've been busy. Yes, indeed.
Okay. And for you, Alessandro?
Yes, lots of work going on.
Perfect. Now, let's start by discussing current market prices. We've seen prices continue in a range of 24-26 since we last spoke, which was in November, if I remember rightly, Tom.
I think so.
Yeah. So what are the main drivers at the moment? What can you talk us through those, please?
Yeah, it's a little mixed at the moment. There is an overriding bearish fundamental outlook, I guess. We have gas prices hit new lows on almost a daily basis across Europe. The clean dark spreads are at the lower end of the second half of 2019's range. We have the return of the UK auctions at some point. We don't know exactly when yet, but at some point they will be coming, perhaps towards the end of Q1. And we've had a mild winter so far. Apart from a few days here and there, winter has been quite mild. On the other side of that, we are coming into compliance buying season. So there are a number of companies across Europe who buy their carbon once they have their verification reports in hand, and they buy it once a year. And obviously the deadline at the end of April means that those guys are now starting to filter through.
For those listeners who are unaware of what the clean dark spread is, that's the profit from generating coal at coal-fired plants. Vitelli, would you concur then that the situation's pretty bearish?
Fundamentally, that's the only conclusion you can really reach. You look at the supply situation, you look at the likelihood of the UK volumes coming to market, you look at the continuing uncertainty over the German coal phase-out and what that means in terms of cancellation of EUAs. We have no real definite idea yet. You look at the mild weather, you look at the extremely high levels of Nordic power reserves and hydro system. All of that points to, a long market. And until we get a clear steer on what Germany is going to do, until we get a sense of how gas is going to evolve over the coming 18 months, I think we're in this what you call it, contrary market.
I think there are a number of factors here which we will return to. But would you then agree, Tom, that the market sentiment is fairly bearish, but prices seem to be bearing up around, in this 24-26 range? Yeah,
I agree. I think I would say market sentiment is almost a little mixed. It seems amazing to say that, given that we've just listed off a whole load of bearish fundamental factors. But I think with the carbon market, the short-term outlook is bearish, but the mid to longer-term outlook is a lot more bullish. And I think that creates almost like a conflicting pool. And I think it also raises the question mark around investors and the way they are interacting with this market. So we saw a lot of investor interest in 2018 when prices moved materially higher. And then 2019 was probably the liquidation of much of that interest. So the question mark is what is waiting in the wings investor-wise, and where and when do they come back in? So I think, yes, there is the chance that the EUA price falls through the first half of this year, but the longer-term outlook is certainly one of higher prices. And what would spur the return of these investors, in your view? Very difficult to say, really, because they play in the shadows, I guess, is fair to say. So not that much is known about them in terms of the way that they interact with the market. The influence through 2018 was obviously very pronounced. The price trebled across the year. And whilst I'm not necessarily saying that will happen again, I do think that there is a lot of interest waiting in the wings to get back into the carbon market. Now, I think if they're looking at the outlook, there's the chance that we get lower prices, but that may well they may well be sitting at at those levels waiting to buy. So we could find that there is good support for carbon at lower levels, not just from compliance buyers, but also from investors looking to get back into this market.
Sure. So you mentioned the UK auctions. When can we expect clarity about 2019, 2020 volumes?
The age-old Brexit question, I guess.
Exactly. It's getting a bit boring now.
When can we get clarity? Yeah. So the UK government will have to discuss the auction calendar with the European Commission. As far as we're aware, that cannot take place until all of the procedural, hopefully, formalities are out the way. But obviously, we're still waiting for that. So once the withdrawal bill is ratified into UK law and EU law, then obviously the talks can progress. Exactly how quick the UK auctions will return once that happens, it's very difficult to say. Our suspicion is it'll probably be nearer the end of Q1.
Okay.
It could be earlier, but obviously the calendar has to be agreed, then the market has to be given notice, and then the auctions start. So, and we're fast moving through January as we speak.
Absolutely. Is this a view you share, Alessandro?
The UK auctions are the short-term driver of supply that everyone is waiting to hear about. It may well be that in the absence of anything concrete in terms of decision on dates and volumes, the market's holding fire, and that's why we're stuck in this 24-26 range. When that information comes out, and it looks more and more likely that the volumes will be spread over the course of the rest of the year, that's actually a supportive signal because it doesn't concentrate any volume in any short period of time. That may be a relief signal, a catalyst moment in the market where people say, okay, we're not going to be flooded with EUAs. It's going to be a drip feed across the rest of the year. Let's think about maybe starting to take positions. It's a real matter of waiting for the actual truth, the decision. I think it's an interesting sign because people have traditionally in the carbon market jumped all over indications of something happening and sold or bought the rumor or the early news, and then when the fact arrives, they've done the opposite. I think people are waiting because we just don't know exactly what the timetable is going to be. And when we actually know the timetable, then we'll see a reaction.
Absolutely. So the market will be eagerly awaiting clarity on that, as it has been waiting for quite some time. But how do you both see the market playing out for maybe beyond Q1 and Q2 and the rest of the year? Alessandro, I know that you conducted a recent Twitter poll. Can you say anything about this? Any surprises there?
The poll that I carried out was sort of just general and democratic and open. I didn't have any reservations on who could participate. So I had a lot of traders get involved, obviously on a confidential basis. And they are noticeably more, I think, bearish than the analysts were. Mm-hmm. And I think a lot of these guys are looking at gas with one eye, looking at power with the other eye, and then looking at carbon afterwards. And they're saying, well, I don't see any supportive signals from the fundamentals. And I think that's something we're going to see throughout the year. Gas isn't going anywhere. People are talking about the supply even increasing this year from the US. And if that happens, then there's no reason really for gas to go up unless we have something strange happening to the east. As a consequence, there's no supportive signal for carbon from the power complex. That is what these guys I think are reacting to. The analysts are looking more in terms of pure supply demand, the operation of the MSR, the German cancellation, and various inputs on a more sort of political/regulatory basis. And I think somewhere between the two, the truth lies.
You said they were largely bearish, the traders. Can you give us an indication of the spread?
Sure. I mean, I had a range that went from at the high end 65 euros as the closing price on December the 14th, which is the expiry of the contract, right the way down to 1750. Okay. So you have quite a wide variety. The average of that was 2880, which is noticeably lower, I think, than some of the analyst polls that we've seen and heard about, which are looking prices more like sort of 28, 29, and in some cases the range as high as 30.
So what's your view here, Tom?
I think we're going to see some bearish pressure in the first half of this year, certainly. But I think as the year progresses, there will be potential for upside. I guess the question mark is from what level that upside starts. So if we've fallen all the way to 17 and get 10 euros of upside, we're still only back to 27 by the end of the year. So I think a lot will depend on just how low gas prices go and how much of that fuel switching is priced in. But it certainly looks like the first half of the year we're going to see pressure on prices. But then, as I say, I think 2021, 2022, the draw of higher prices is likely to see interest in this market. Whether that's when the investors looking to get in second half of this year, perhaps very difficult to know. But I certainly think by the end of this year, we'll probably be looking higher rather than lower.
Are there any other fundamental factors to keep an eye on? We mentioned gas. We've mentioned, Brexit. I think we'll talk a little bit about the German coal exit potentially. But I'm thinking also around the Green Deal. Once details of the European Commission's Green Deal emerged, how do you think this will play out in the carbon market? Will it be very volatile? Will it react to certain tweets or noises coming from politicians, or will people wait and see until the details emerge? What do you see happening here, Tom?
I think probably because of the timelines, it won't be quite so sensitive. So I don't think necessarily tweets are going to be moving the market, but the Green Deal is huge. It's a big development. The 2030 target in particular, so increasing that from 40% to 50 to 55%, has massive potential implications for the EU ETS. Obviously, we don't have any concrete proposals yet with which to work with. But it looks like the linear reduction factor, so the speed at which the cap falls, will have to increase substantially to meet those targets in the EU ETS.
These are details that will emerge in the coming months, potentially in the run up to 21-22. So, Alessandro, you're going to say.
Yeah, and in terms of the impact of this Green Deal, you have to go back and look at how the MSR proposals evolved over time and when the market reacted to them as well. The MSR was known about for a good 18 months to 2 years before it actually was approved in the EU at the very end of 2017. And it was only really in that last quarter of 2017, when the ink was about to be placed on the paper, that prices actually started moving. So we have a long way to go before the Green New Deal, in all its various forms, in all the various areas where it's going to impact us, will be elaborated, discussed, debated, approved, amended, and then finally taken to the European Council. So I'm not looking for this for another 18 months minimum, maybe even 2 years minimum, before we start seeing the final form that it's going to take, and then all the knock-on impacts in terms of reform of the EU ETS. So I think you can forget about that for 2020 for sure. In 2021, you start keeping an ear on what's going on in Brussels, and then maybe towards the end of 2021, you start thinking, okay, this is looking a bit more solid. Now we can start planning.
So the similarity, as you say, would more likely be with the Market Stability Reserve rather than the backloading issues. Yeah, it's
the same process, the same political process of a proposal, a debate, Parliament, committees, amendments, etc., etc.
And Tom, yes.
So
what's your view here?
I think, whilst I agree with that, I think the difference is that the MSR, there was always a lot of doubt as to whether it would ever get through. Whereas the Green Deal, by the fact that every member state bar one has signed up to it already, obviously the proposals have got to actually be fleshed out now. But the fact that there's buy-in from everyone bar one member state suggests that this is happening one way or the other. Whereas the MSR, until the signature was on the dotted line, was very much in the balance, I would say. So I think you maybe get more of as we start to get the details through, we maybe get more of a draw to that. And I think the writing is on the wall with carbon prices across Europe, not just for those in the EU ETS.
Absolutely. Also, in recent weeks, we've seen a lot of news and noise and maybe some confusion coming out of Germany. Now, they've announced closures. They've also announced that a new ultra-modern coal plant will come online. How they compensate for that will be interesting. But what are the implications for the carbon market here, Tom? Have you looked at this in any detail? I think, the details around sort of cancellation of carbon allowances, they're not really there yet. But what's your view?
Yeah, so we're still awaiting the final agreement, which I believe is the 29th of January. I think we get that. As we understand it, the cancellation will be sizable. I think the key issue in terms of cancellation is the timing of that cancellation. So if you have coal plants shutting and then the cancellation isn't until the following year, the net effect may be zero in terms of the EUA overspill. But obviously you have 1 year that's long and then the next year the cancellation takes place. So that will potentially drive volatility in the market. But obviously we need to see the final plans before you can really get a good grip on how this will all play out.
Alessandro, what's your view?
Well, I still think there's a few details that we need to understand. I mean, there's still confusion as far as I'm concerned over the language regarding how many years' worth of allowances are going to be cancelled. There is mention of the equivalent of 5 years average emissions being cancelled. And for a plant that stops in 2022, if that means that the next 5 years' worth of that demand is cancelled, they come back in 2027. Does the supply go back up in 2027 or 2028 or not? Are these EUAs cancelled every year in perpetuity until there is a recalculation of the overall cap? It's not entirely clear to me what this represents in terms of a permanent removal of EUAs. So I'm still a bit skeptical. The details have come out. They've contradicted themselves. They've been added to, subtracted from. I'm not yet ready to take a view on this.
And I think, maybe it's unlikely that all the details will be clear on the 29th as well. I think, this is going to be something that's going to keep developing and the ball keep rolling.
I agree with Alessandro. I think there is still a lot of uncertainty. We simply don't know the details yet, and therefore it's very difficult. And there has been a certain amount of flip-flopping, I guess, between the things that have leaked, and it makes it then very difficult for the market to know what may happen. And I guess that makes people nervous in terms of their interaction with the market. You don't want this news to break and it be completely different from what you're expecting.
And I think the political situation, again, if I'm not completely wrong, could change in Germany as well. And you could get a lot of grassroots pressure, calling for an earlier closure, which would then change the picture fundamentally yet again. On the 1st of April, we'll get some figures concerning 2019 emissions. Tom, what do you expect to see here? Will we get a large decrease? Will it be flat?
We think power emissions will be down. Industrial emissions, more or less flat, probably slightly lower, but more or less flat. But certainly the power sector, there was fuel switching taking place through 2019, and without doubt power emissions will be down, I think.
How about you, Alessandro?
Yes, I mean the numbers from Germany, I've seen figures thrown around up to 15% reduction in emissions year on year from the power sector. If that's replicated across most of Europe or a lot of Europe, then that's quite substantial. Industrial emissions, there's been no warning flags thrown up about industrial production sinking rapidly. So if there's a small decrease, then that's probably within the expectations. I don't think anyone's expecting an increase in emissions from last year, so that's off the table. It's just exactly how much they fall, and will it be the biggest decrease ever? We've got a big chunk of that being contributed by the power sector. So that's, I think, the scale of the decrease that we're looking at.
15%?
Well, I've heard some numbers that show some big decreases, yes. Over the course of last year, with especially the second half of the year having seen wholesale switching, there's some big numbers there. I've also understood there's still gas capacity in Germany that remains to be switched on. So if gas price keeps going, if power price holds reasonably stable, then there is an incentive to move the remaining gas capacity onto the market and take coal out. So there's more switching to be done, and that could even drive another decrease in 2020. We'll just have to wait and see how it turns out. But yeah, I've seen some big numbers.
Tom, when we last spoke, you mentioned that some companies may not fully realise the cost of becoming carbon compliant, i.e. meeting their obligations under the EU ETS. Has this changed since we last spoke?
No, I don't think so. I think the EU ETS is one part of carbon costs that companies now face, and the Green Deal will only increase that. So I think there is, whilst a lot of companies don't necessarily understand their EU ETS exposure fully, it's also a total carbon cost that I think people are wildly underestimating. So as I say, the Green Deal is huge. It will drive carbon costs across Europe for every business higher, not just those in the EU ETS. We've seen since the COP25 failure, I guess you could say, with Article 6, we've really seen businesses picking up the kind of mantle on that. We had Microsoft the other day with a 2030 carbon negative target, I think it was. And there's been a whole load more. And I think the risk companies face is not only higher carbon prices, but also being left behind in their respective markets. If competitors are looking at carbon neutrality, renewable electricity, the trends are changing, investor and consumer. And I think there is a big risk to all companies across Europe if they're not proactive in tackling this carbon cost that they're going to face.
We talked briefly at the beginning about gas prices being one of the drivers here. And we've also mentioned that, they look set to continue downwards, especially now that the deal between Russia and the Ukraine. How will this impact carbon, Tom? I mean, will this lower demand for EUAs and then potentially also lower prices?
Yeah, certainly. I mean, Alessandro just touched on that in terms of the amount of fuel switching that took place in 2019. And there is still some to come. So we have high supply, relatively low demand, especially with the winter having been so mild so far. We look set to head out of winter with record high levels of storage across Europe. I guess the big question mark is potentially the summer. Where does it all go? If storage is full, this gas has to find a home somewhere. And that points to prices falling even further, perhaps a lot further. You're then in fuel switched territory, everything utilised that can be utilised from the gas market.
Because there is a limit to what, I mean, you can't switch everywhere and, all gas plants. I mean, you mentioned the gas plants earlier, Alessandro. I mean, do you expect to see every gas plant in Europe fully utilised should prices fall that low?
Well, it's possible. I mean, it's one of those statistical calculations or I don't know what you'd call it. You have to go out there and investigate and find out exactly how much plant is running. And, I had I've heard people say that I think in Germany there's about 3 gigawatts of gas-fired capacity that's left to come online. So there's still some potential switching to be done. The question is what happens when you get to the maximum practical switching? You still have an armada of LNG ships coming east from the US. They're already flaring huge amounts of gas in the basins, and they're still exporting. Where do we rescue that flared gas from? Because that's bad news. You then have to think about Asia, alternate markets. Where is that gas going to go? Is Asia able to take it? And if not, are they going to start shutting in production? Because some of the numbers, the production costs and margins for U.S. Gas producers now are critical. And some are talking about shutting in production, and some are suffering financially as a result of all of that. There could be, in one sense, a quite rapid turnaround, because if Henry Hub gas just keeps going down, it's below $2, I think, right now, and it risks going further down, there could just be a wholesale switch-off of production in the States. And once that happens, the turnaround in the European market will be quite rapid, I would imagine. Traders will not want to be caught on the wrong foot if suddenly there's no more U.S. LNG being sent out. So I think that's one to keep a really close eye on.
And I think that's maybe another topic for a separate podcast as well, Alessandro. Thank you for that. It's a pleasure to have you both on the pod, and I hope we can discuss these issues again or revisit them later in the year. So thank you very much, Tom, for joining the Montel Weekly podcast.
Thank you for having me.
And thank you, Alessandro.
It's a pleasure.
Remember to keep up to date with all our stories on Montel News, follow us on Twitter and LinkedIn, and subscribe to the Montel Weekly podcast on Apple Podcasts and Spotify. Thank you and goodbye.